This video is for educational and informational purposes only. It is not financial advice or a recommendation to buy, sell, or hold any asset. Futures, leveraged products, and precious metals trading involve substantial risk. Always use your own analysis and risk management. Gold just broke the $4,000 area. But this was not random. By the time traders saw the dump on the 1-hour chart, the structure had already been warning that gold was under pressure. The point of this video is not to chase the move after the fact. The point is to walk through where the warning signs showed up, why the $4,000 level mattered, and what traders should watch next. Round numbers matter because traders watch them. 4,000 was not just a price, it was a psychological line. Above it, bulls could still argue that gold was absorbing pressure. Below it, the conversation changed. The market stopped asking whether gold was simply pulling back. It started asking whether the breakdown had enough momentum to continue. That is why this move matters. Not because a round number is magic, because once price starts accepting below a watched level, trapped longs, late buyers, and short sellers all begin reacting to the same area. That is when structure becomes more important than opinion. Start with MGC, micro gold futures, on the daily chart. The daily view shows the bigger picture pressure before the final break. Gold had already moved from a strong advance into a lower high, lower pressure environment. The chart was no longer clean continuation. It was compression, rejection, and bearish pressure building under the moving structure. The important detail is that the daily chart did not need to predict the exact candle that would break 4,000. It only needed to show that the easy upside structure had already changed. That is the difference between forecasting and reading. Forecasting says, I know what happens next. Reading says, this market is no longer acting the way it acted before. On MGC Daily, that shift was already visible. Now compare that with XAUUSD, spot gold. This matters because futures and spot are different instruments, but they often confirm the same pressure. The XAUUSD daily chart shows the same broad story. The market pushed up, failed to hold the stronger structure, and then started respecting the downside path. That confirmation is important. When MGC and spot gold are both showing weakening daily structure, the story becomes harder to dismiss as noise from one contract. It becomes a gold market pressure story. That does not mean every bounce should be sold blindly. It means traders need to respect the fact that the higher time frame structure had already stopped supporting easy bullish continuation. The 4-hour MGC chart is where the breakdown becomes more obvious. This is where price loses the prior support areas, fails into resistance, and starts stepping lower. The bearish structure is not just one candle. It is a sequence. Break, retest, failure, continuation. That sequence matters because it tells traders the market is not only falling, it is accepting lower prices. The 4-hour view also shows why chasing after the vertical move is dangerous. Once price is already extended, the better question is not, can I still short it? The better question is, where would the market have to reclaim structure to prove sellers are losing control? Now move to XAUUSD on the 4-hour chart. This chart confirms the same breakdown pressure on spot gold. Price loses the support area, rejects into the lower structure, and continues pressing beneath the 4,000 zone. That is the sync we want to see when building a market story. MGC and XAUUSD do not have to print identical candles. But when both instruments show the same directional pressure, the read becomes stronger. This is where traders should slow down and separate emotion from evidence. The emotion says gold dumped. The evidence says structure weakened first, the 4-hour chart confirmed the breakdown, and then price accelerated. The 1-hour MGC chart shows the execution layer. This is where the break becomes visible in real time. Price pushed below the watched area, attempted to stabilize, and then struggled around the retest and continuation zone. That is the part many traders miss. They see the big red move and think the trade is obvious. But the trade is not the candle. The trade is the structure around the candle. Where did price break? Where did it retest? Where did sellers defend? Where would the idea be wrong? That is how you avoid turning a clean breakdown into an emotional chase. The XAUUSD 1-hour chart gives the same execution red. Spot gold breaks under the 4,000 area, builds pressure beneath the prior support, and then tries to work through the retest zone. This is where the next decision point comes from. If gold cannot reclaim the broken structure, continuation remains the cleaner read. If price reclaims the 4,000 area and holds above the broken zone, then sellers may be losing control and the breakdown could shift into stabilization. That is the key. We are not married to one direction. We are watching whether price confirms continuation or proves the breakdown is failing. So what matters next? First, watch the $4,000 area. If price stays below it and rejects from beneath, the market is still treating that level as resistance. Second, watch the prior broken structure on the 1-hour and 4-hour charts. If sellers continue defending those zones, the bearish read stays active. Third, watch for reclaim. A clean reclaim does not mean gold instantly becomes bullish again. But it would mean the breakdown is no longer clean, and traders need to stop treating the short side as automatic. That is the discipline. Do not chase the dump. Do not fight the structure. Let price show whether the break is continuing or failing. Gold breaking 4,000 was the headline. But the real story was structure. Daily pressure showed the market had already changed. The 4-hour charts confirmed the breakdown. The 1-hour charts showed the execution zone. And MGC plus XAUUSD told the same story from two different instruments. That is why the dump was not random. Subscribe to Black Bear Trading for disciplined multi-time frame market analysis, and I will see you in the next one.